The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts that matter, let's have a quick look at what traders are watching out there. Shein and Temu boosting their spending on digital ads in Europe in April. This according to data from Sensor Tower, showing a shift away from the US, where of course companies face tariffs. The US Department of Education informing Harvard University that it's freezing billions of dollars in research grants until the university concedes to a number of demands from the Trump administration. Ford Motor has suspended its annual guidance because of uncertainty around the tariff, saying the levies will cost it about $1.5 billion in adjusted earnings before interest and taxes. And Apple sold $4.5 billion worth of bonds late Monday, its first offering in 2 years, and says it plans to use the proceeds to repurchase stock and repay outstanding debt. Let's get into the technicals now. Michael Gable from Fairmont Equities joining me on set. Great to see you.
Thank you.
Saw the S&P 500 on this extraordinary winning streak, but it has broken that.
Yeah, look, fantastic rally that we've seen since those lows. Obviously that's starting to make some investors a bit nervous. It's run very hard. Look, on the flip side, you want to see it bounce hard. So I'd be worried if the market 3 weeks later after all those 4 weeks later after all those sort of shenanigans at the start of April, if the market, if the S&P 500 was still loitering around the low 5,000s, I'd be a bit concerned. But, very nice sort of strong rally. When we were last on the show a few weeks ago, we spoke about, it'll come back up towards the 200-day moving average and then probably find a bit of resistance. So it's a moving average that, almost everybody watches. So in some respects, it's a self-fulfilling prophecy here where, as we could see on this chart, right underneath that moving average, which is the blue line. So, you'd expect a bit of cooling off here. Now, whether it trades sideways for a bit or it pulls back a little bit deeper, it's too early for me to know. But essentially what it's saying is, if you didn't get aggressively long a few weeks ago, just hold off, wait for the next sort of consolidation, the next dip in the market, and then you could really start sort of cranking on those long positions. There'll still be opportunities out there, which we'll cover on this show, but expect a period of consolidation.
I think shenanigans is the best way to describe what we saw in April. Let's talk about gold. Weaker US dollar safe haven demand, still seeing gold very, very solid here.
Yeah, so look, I still like gold longer term, and I think last time I was here, I had a longer term chart showing that it can do really well over the long term. But what I thought I'd do today is bring in just a daily chart, so just to show what it's done since the start of the year. Now, obviously, sort of mid-April, it ran extremely hard, and of course, anything that moves up in a straight line needs to give back a bit before it could continue on. But it's very nice to see that. If you're bullish gold, it's nice to see that after that peak there in mid-April, the gold price didn't get smashed back down. It has actually managed to hold in relatively well. So it's formed what we could call this a bull flag. We can call it a pennant, depending on where you want to draw your lines. But essentially, it's consolidated quite nicely over the past sort of several sessions, and it looks like overnight it's popped out of that consolidation period. So what I mean by that is we could see that it's moved above those blue lines. So even in the short term, it looks like that downwards move is over now in gold, and I think it will continue higher from here.
All right, let's drill down into some stocks. Speaking of drilling, Boss Energy, heavily shorted uranium stock. What is that showing you, the technicals?
Looks really, really good. So look, I've been bullish on the uranium sector for about 18 months now, and they did really well at the start of last year, and then the last several months has seen those stocks basically go back to where they started. So I think that provides a huge opportunity. Now, in terms of the charts, big buy signal here. So quite simply, the top chart is the price. It's a weekly chart. The bottom is the RSI, which is a momentum indicator. It's showing a lot of bullish momentum, bullish divergence. So what I mean by that is the momentum indicator at the bottom, that bottomed out in about September last year and has trended higher since then, while the share price has trended lower. So essentially when you see that divergence, it's a very bullish sign, and now Boss Energy is reacting. So in the past, sort of few weeks or so, it's already rallied about 50%. But as you mentioned, it's heavily shorted. Close to 25% of this stock is shorted. So if we've seen the lows, and I think we have, and we've seen the spot price already start to get a bit of a move on, if those shorts start to cover, you're going to see, if you think the move so far has been explosive in the past few weeks, wait till those shorts start covering. So I think that's a big opportunity here with Boss Energy.
And Bannerman, you also think looks like a good buy here?
Yeah, so also in that sector, Bannerman's a smaller company, so in some ways has a lot more leverage to the improvement in that sector. Also showing bullish divergence on the weekly chart. Not as heavily shorted. I think the shorts are up at sort of several percent at the moment. But look, another good buy in that sector if you're looking for one of the businesses which isn't producing yet, so could potentially give you some more leveraged upside.
All right, let's talk about Regis, because we're focusing quite a lot on the healthcare space as well, following Labor's landslide victory. What does Regis show you in terms of whether or not this is, looking good? I mean, that chart looks pretty extraordinary. Yeah,
so I mean, a great strategy when markets pull back is to actually look for businesses, look for share prices that hold up very well. So clearly, investors in that stock, they're not tourists. They're not just dumping the stock as soon as the market starts falling, and that's a really bullish sign. So, with the recent pullback in the market, as I mentioned a few weeks ago, the likes of the Macquaries of the world, yes, go in, buy those on the dip. But now that the market's already bounced pretty hard, well, what else do we look for? It's too late to chase some of these stocks potentially. Regis, as we could see a few days ago, this is a daily chart, made an all-time high. And as we could see during that sort of period over the past few weeks, it's held up very well. So it's basically been in a very large consolidation since November. That's what I'm indicating by the blue lines. And then last week it popped out. So that's just a clear upside break when it comes to charting. You see a break like that, you've got to buy it every time. As long as you've got your stop loss, I'd have it just under 650. A stock that's held up well, now breaking higher. It's a buy here, stop loss under 650, and just see how high it can run.
Doubled in a year, gotta love that. All right, thank you, Michael Gable from Fairmont Equities. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.